All right, today we're going to be diving into some major crypto catalysts that could be impacting the markets in a whole slew of areas that you guys are going to want to pay attention to. If you're looking at anything in blockchain, this is the one to watch today. My name is Paul Barron. Welcome back into Tech Path. Joining me today is William Quigley, who is the co-founder of Wax and also Tether. Great to have you back on the show, William.
Thank you. Good to be here.
Yeah, good to see you. So, William, let's get into a few things. First, I want to do is go into Wax and kind of get some updates. Give me kind of a framework of what's happening with Wax right now. I was looking at your sales volume. Looks as though it's declining slightly. Tell me how you guys are and what you guys are doing to maybe kind of correct these kind of things.
Sure. So for those people who may not know, so Wax was the first blockchain that was purpose-built for NFTs and video games.
Right.
My partner, Jonathan Yantis, and myself co-founded Wax together. And we had spent many years in various aspects of the video gaming industry, including video game virtual item trading, which really took off with my partner's invention of the idea of allowing people to trade video game virtual items for real money. And that would have been back in late 90s with a video game that's probably been forgotten called Ultima Online. And then with the advent of skins, which are video game virtual items that have no in-game utility, they're strictly for cosmetic purposes, the market grew to almost 50 billion annually. Mm-hmm. And you can see there was kind of a natural connection between skins and NFTs. We thought, hey, it would be great to actually allow people to freely trade virtual items because video games a lot of times would block the usage. And so Wax was born in 2017. We did the ICO. 2018, we launched. Initially, we were working on a sort of a layer 2 Ethereum-based consensus mechanism, but Ethereum was too expensive, as a lot of people eventually figured out. So then we shifted to what I think is the best consensus mechanism, which is DPoS, delegated proof of stake, very fast. NFTs obviously were really hyped, so it was natural that they were going to fall off. You saw that with every single area within blockchain video gaming and NFT collections, the NFT marketplaces. So where goes those types of applications, so goes Wax.
Yeah. Well, I think, the market in general, it's starting to see a little bit of life coming back into it. And we've seen so much advancements now in terms of the projects being launched. We'll get into all sorts of things that could apply to what's happening here. I was looking at your roadmap here. In progress right now, you've got a few things, the tokenomics update, the rebalancing system, and the EVM launch. Those are new. Talk to me a little bit about your roadmap, how things are coming.
Sure. So first on the tokenomics, it turns out that having fees associated with each transaction, while normally we hear people say, I hate paying fees, the fees have a very good purpose, which is they create a profit bucket from which people can participate. Yeah. And if you look at the biggest chains like Bitcoin and Ethereum, they have $1 billion plus fee income on an annual basis, which allows for a lot of people to take an interest, particularly entrepreneurs. So when we were pulling off of Ethereum and launching our own layer 1 on Wax, our thinking was, well, particularly in video game item trading and then ultimately NFT and blockchain video gaming, those consumers would prefer to have much fewer fees in doing what they do. But what we eventually figured out was people actually don't mind small amounts of fees. And as I said, they create an opportunity for other entrepreneurs to come in and offer products. So our tokenomics changed from no fees. What you would do with our blockchain is you would stake a certain amount of tokens and then basically be able to do transactions. The more transactions you wanted to do, the more you'd stake. We changed that to just a per transaction fee model, which is, I think, more in line with how the industry has evolved. And so far, it looks like a lot more people would prefer that. So that's why we changed to tokenomics.
Okay.
And
all right.
then
Makes sense.
in terms of EVM, that's Ethereum virtual machine. That's basically the logic that runs smart contracts on Ethereum. But as probably a lot of your audience knows, many other chains have adopted an EVM compatibility. Yes. A lot of the wallets are EVM compatible, and that simply is useful, especially when you want to bridge from one blockchain to another, and you want to be able to maintain the same capabilities you have on your chain on Ethereum, because Ethereum is the number 2 blockchain. It still has the largest number of, let's say, NFT transactions, right. NFT dollar volume, and so forth. So becoming EVM compatible seemed like a logical place, since interoperability is an ongoing theme. It's still not perfected. We can talk about that, but it's more and more needed, since there really isn't anybody who uses blockchains who only uses one blockchain.
Right. Yeah, I would agree with you. I think this cross-chain world that we live in today has pretty much been magnified. Obviously, with what's happened with ZK EVM, we've seen so many different technology updates within blockchain over just the last 18 months. A lot of advancements. I want to go into some of the categories that are starting to be affected by blockchain. I want to get your opinion on a few of these, because, with your experience with Tether, launching Wax, being very early in a lot of the developments that we are now seeing as mainstream blockchain, I feel like you can identify these things. Blockchain solves AI and fakes. So this is a problem we're having in media right now. It's a big issue. You've got Fox and Polygon now with verified tools for news articles. This is most likely going to continue to be a big problem. We'll probably see something like this in the election this year, causing major issues of fake news and everything from AI generated, news and other aspects, video, audio, etc. First of all, what is your thought on this? Do you feel like this is fairly well accepted in terms of an advancement, or do you think this has still got a long ways to go before we see some real progress?
So let me just say this. So blockchains are the worst possible way to do virtually everything, right? So I want to just mention that as an aside, because in the area of verifying content, however, that is one of the areas where blockchains are fabulous. When it comes to an area where a blockchain is ideal, that is in authenticating whether something is the genuine article. And I don't believe there's anything that does it better than a blockchain. And so, which is why money and tokens are such a good use case for it. I don't know of any other technology on Earth that allows you to do that. So that is an extremely useful aspect of a blockchain. With a random piece of content, let's say from Fox News, that's where you kind of get into how good it's actually going to be. Somebody could spoof the site where you're supposed to go to verify if a piece of content is real. So you're on a fake site that's saying, yeah, it's real, but it never actually touched a blockchain.
Yeah.
But if we can solve some of those issues, then using the blockchain to stipulate, is this real? Was this really produced from the original content creator? That's the whole nature of why NFTs work. Then It's a fabulous application.
Yeah, I'm looking at, just tokenized assets is another major category. Obviously, we've already seen that. You're one of the pioneers in this area. And this has already started to really accelerate. We've seen everything from Nike, what they've done with Artifact. Obviously, we saw Pudgy Penguins and a great success on the phygital side, where they created the physical and the digital asset starting to move forward. Do you see more brands going in this direction, or is it still just early adopters? What are your thoughts on tokenized assets?
It is, as you said, we literally invented this concept from the consumer product side of taking a physical item and tokenizing it and allowing people to trade the tokenized or digital version of that item while the physical item resides somewhere else and can be redeemed on demand when the person holding the token would like to actually receive the physical good. And having said that, it has taken longer than I thought it would. So we did that about 7 years ago. When we talked to Artifact before they were Artifact, we had said, hey guys, this is how you should actually do this. And they're like, oh, okay, that makes sense. That sounds cool. Let's see if anybody cares. No one really cared, to be honest. When we went with the Artifact guys to E3, which is a big video gaming show in LA each year, I think that was 2019. It could have been 2018, 2019. We had a booth set up, almost no interest, right? But then the NFT craze hit, and people thought it was a clever extension of NFTs, where it's not just a digital representation, it's a physical one. I have been surprised at the fact that it has not ramped in popularity yet. These are still very niche-y things. There's a whole bunch of benefits that extend way beyond just the benefits of trading that make tokenizing consumer products really useful. One is simply that many times the individual purchasing the consumer product isn't the end user of it. That's often the case. And in that case, if you could send the person who you want to give it to a token, and then they can decide either when to redeem it, or if they don't actually want it, or they have a duplicate of that item, and they would prefer just to trade it for something that they do want. There's a ton of truck rolls and just physical movement of things that take energy that wouldn't have to be done. I consider it sort of putting a pause button on the logistics chain for somebody right at the tail end to decide when and where they want that thing delivered to them. I think it's a great concept, but I come to believe that it's also quite a leap in capabilities over how people work today. And I think it's just not been adopted in people's day-to-day behavior as a result of that.
Where I see that might play into it is with something that might be more on the collectible side of, say, wine. Now, wine is a different thing because it can be in a wine cellar and it's often not seen. And it's something that could be sitting over in a massive wine cellar that never has to deliver to me as a collector. And I own the NFT, which now gives me the verification of it. And I can trade that and then sell that without ever moving that bottle, right out of it. I could see that going with that kind of direct. Same thing with art in some cases.
Well.
Yeah,
we did try wine maybe 5 years ago. I've tried every category. Handbags, sneakers, watches, wine, physical poster.
Which one do you think will maybe get the legs under it first?
Trading cards, there were a lot of people who like trading cards. There's a lot of trading card people. If I know which one was going to ramp, I would be doing it. We're 13 years into blockchain, and it's tens of millions, not hundreds of millions or billions. So it's been much slower.
Yeah, but I would argue that a minute in the sense that maybe blockchain, going back to the origin of Bitcoin, sure, yes, we have 13 years, 10 years plus. But when you really look at the core of what's happening with smart contracts and kind of the evolution of Web3, obviously what we're seeing right now in collectibles and gaming, I feel like this is just really, really young, much like, because I was around in Silicon Valley during that era when the internet was being born. And that's era between 97 and 2000, dot bomb, that was a lot like what we're dealing with right now. A lot of new innovation, a lot of blue sky, which is what we're seeing today even. And then it was very slowly, and then boom, all at once. And then that's when we saw, these massive adoption cycles.
Say, mobility and crypto is still not, well done for a whole bunch of reasons. One of which, for many years, the app stores were not very supportive of crypto-based apps,
Exactly.
and that's relaxed a little, so that could help.
Yeah, for sure. We're taking a lot of time here. I want to go on to a couple other areas. Sports betting, save streaming. This is something that's happening right now. Disney, ESPN Bet is happening. You got TV, Apple TV with soccer, soccer, and then you've got Netflix, World, wrestling, etc. Amazon and NASCAR. A lot happening right now, and you've got DraftKings moving in this space. All sorts of things that could lean into what's happening with blockchain. Then if you look at the data, this is Fox Sports just showing the sports betting size and the potential growth here up to 2030. This is going to be a big market. What are your thoughts on how blockchain might play into this?
Betting is a fantastic application of blockchain because you do know with certainty when someone wagers that bet that dollar amount they've given you is genuine and can't be pulled back. When you run a betting site and you take credit cards in, you will get flooded with stolen credit cards and then a massive chargeback problem if you don't restrict when people can actually gain access to the funds they've deposited from their credit card. So that's why when you go on a site as a new customer and you put in your credit card, some sites make you wait 7 days. Some sites give you a very small amount of money to use initially, right? Which, because it costs so much to acquire a customer in the betting space, you'd like to let them bet as much as they can, but you can't because of fraud. So that's an area where crypto is fantastic. You cannot do a chargeback, and once the company gets that crypto, it can't be taken back. So we'll see if these betting sites adopt it. Part of that's going to be a regulatory issue. The regulators have to accept that as a form of payment.
Yeah. Well, I think once we see stablecoin regulation, that will get us into the right framework, at least for something like this for betting. I want to jump over to rideshare and what's happening there. Uber, of course, they just lost a huge case in New York, basically stealing money from drivers. Not a good look for Uber. The idea here is decentralized. This other logo here that I'm showing on screen is a project. It's a decentralized ride-sharing project called Teleport. Rides on the Solana blockchain. The idea is to give the drivers the ability to communicate with the customer without the middleman, which has been Uber. And if you look at that as a potential, because this could go into food delivery, all sorts of things, for a decentralized future, for the gig economy, do you feel like blockchain is going to be one of the major tech use cases?
You can get degrees of decentralization, but I don't know if we know how to create something fully decentralized. If we maybe call it a cooperative, right? The concept of a cooperative is by pooling resources and sharing them and eliminating the need for that cooperative entity to make a profit. It only needs to generate as much fee income as necessary to operate it. Then all the people using it can presumably be better off.
Yeah.
So if drivers around in a given city created a cartel, of sorts, and said, we're going to appoint a group of people who are going to represent us, and they're going to build and maintain this app, blah, 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 it would work. Well, that sounds a lot like a union. And one of the things we know about unions is union bosses extract a lot of the money. Union bosses play favorites. And so I just don't know how it gets done. I mean, there's a way for it to get done, but I don't think we're there yet. And that is taking what we used to call DAX, and which is a purely software-owned, managed entity. No humans are involved.
Right.
That can work as long as the software continues to do the bidding of the people who originally created it. So that's where we kind of start to merge into the AI space.
Yep.
And that's potential. So yeah, if you merge AI and you can create a DAC or a DAO, a real one. The problem now is the word DAO has been hijacked by people who are running private companies masquerading as DAOs.
The DAO, yeah.
Right. But if we could rename those, and maybe we'll just have to call them AIs to make people understand it. Very promising, I would say, for what we talk about kind of loosely as decentralized applications. The AI movement is a promising direction for that becoming possible.
I want to go to ticketing. Yeah. Ticketing is a big deal. We're starting to see some movement in this space. Obviously, we've seen issues with Ticketmaster. We're also seeing things around travel that could come into this. Here's a tweet right here. TravelX now, one of the blockchain projects out there for NFT ticketing. And you kind of see the growth right here. This was December of last year, and that spike right there, bam. So you've got a great opportunity here of NFTs being utilized in the ticketing world. You feel like that has legs going forward?
Only if, and I say this to all the entrepreneurs I work with in blockchain, only if the incorporation of blockchain in ticketing, so making tickets NFTs, which means they're tokenized as opposed to digitized.
Right.
Only if you then take one step further and say, which allows the end user to do something. Yep. So what is it you would like to allow the end user to do? The obvious thing is to be able to trade it, right?
Yep.
And then maybe if you wanted to, you were worried about counterfeiting, right?
Mm-hmm.
So for instance, at Coachella, I have personal experience with that, having purchased a counterfeit ticket, which is so hard to detect that I actually got through 3 or 4 days of it, before somebody was like, well, wait a minute, this thing looks fake. So, for preventing counterfeiting, I think it could be a useful use case, but it really requires them as a business to want to change some of their terms and conditions. Mm-hmm. And so that to me is going to be where it either takes off or it doesn't.
Speaking of that, you talk about some of the leaps forward that have happened. Meta, of course, made a huge one, really a big bet in 2021 when they changed their name. And immersive experiences, when you look at that and then just some of the data, here's coming in from MetaQuest, this is looking at their historical sales. Most likely we're going to see that after hours by the time we publish this, but it's earnings week for Meta. It's very possible we could see the biggest sales period ever by Meta in terms of these hardware devices. This all leans into the potential of immersive experiences. And back to your point, the opportunity of things like augments. This is a good one right here. Meta will bring augments to Quest 3. Again, this gets into where you're talking about in-game assets that potentially could be traded down the road. This should be high on your list of approval in terms of areas. What are your thoughts in terms of immersive experiences like this?
I will have to edit my thoughts because they're too numerous to mention in this podcast. But yeah, I absolutely love the both AR and VR. Mm-hmm. AR seems to be, from my frame of reference, far more valuable in the long term.
Sure.
However, the issue is in the hardware. A huge percent of the population refuses to wear any kind of device. It's a friction point. And if you simply look at all of the headsets that have come so far, the battery issues, the heat dissipation, all of these things are enormously big issues for adoption, and they are not trivial problems to solve. So I don't think we will see wide-scale consumer mass market adoption of VR or AR until the hardware is optimized, which means, really, really small batteries, long-lasting life, minimal heat dissipation. I think it's 2040 where you see mass market adoption. This is what I call Web 4. Web 4 is the hardware element. You need advances in the science of battery technology, advances in graphics, a lot of advances in silicon, and then even things like the monitors and the glasses. All of those things require, it's not just engineering, it's actually like real research and development. So right now, no, I'm not terribly optimistic in the next 5 years. And if I'm wrong, amazing.
Yeah, amazing. Yeah, it'd be a good wrong. Well, I think, some people would look back at that and, in the era of BlackBerry and the Treo, the Palm Pilot, those, and the advancements that we saw in terms of the leap forward that Jobs made with the iPhone. That was a tantamount, leap because of the touchscreen interface. And it really did change the world. At the same time, it was also a lot of pushback, back to your point, of people just accepting that. So, but this is a little bit different because it's a wearable. I get that. I want to jump over to Microsoft. Go ahead.
Keep one thing in mind. Steve Jobs created the iPhone, remarkable, but he built that on the backs of trillions of dollars of investment in the telecom infrastructure and wireless infrastructure and semiconductor infrastructure. You know what I mean? It was like this multi-trillion-dollar investment that allowed the iPhone to work. And I think we need something tantamount to that for this digital overlay every day. As common as you picking up your phone, you will have some sort of wearable device that allows you to tap into this metaverse.
Yeah. Well, that's where, if we truly have a promise of AI, maybe that is where it does come in terms of chip manufacturing advances. Obviously, we've already seen some big moves from NVIDIA that has kind of put us in a place that a lot of people didn't think we'd be this early. Microsoft, first mover. This is something that we have a theory on. I wanted to get your opinion on this. So this is a game called Palworld. It is a small studio that launched and went viral on Xbox and I think on PC. And in a very short period of time, they were able to really advance in terms of total number of players, etc. Microsoft comes in and actually starts to put a deal together with Palworld, a very small studio. Opportunity here for something like Microsoft to maybe step up, because they're doing dedicated servers, some engineering resources with them. They announced this. This happened very fast, mainly because of the adoption of Palworld. It just went viral very quickly. So what it looks at, I look at this and I think Web3 gaming, because I'm thinking, all right, small studios, a viral potential game, and now you have Microsoft doing this almost with the blueprint of what could happen with a Web3 if Microsoft were to adopt NFTs in game. Do you think that's coming with Microsoft, is an adoption of NFT architectures inside games?
No, not in the near term. Here's what I think is going to happen. So the history of video gaming has been extremely consistent when it comes to innovation. You have an innovation, the incumbent video game companies ignore it. Some independent game developers say, what the heck, might as well try, have nothing to lose. We're not trying to protect a game franchise. That thing takes off. Those companies become huge. The legacy companies, a few of them survive until the next innovation where the previous innovators now are the incumbents. We saw this from arcades to PC, PC to handhelds, handhelds to consoles, consoles to browser, then browser to mobile, mobile to blockchain. And every single time the incumbents poo-pooed, ignored the innovation, the new platform, until they saw that there was actually something there. They're going to have to get it approved in their higher up corporate structure. And to do that, they're going to have to point to something. Big companies, there's very little innovation at big companies. They wait to see a trend and then they jump on it. And I think so far, what the most popular blockchain-based games remain farming-style games, which are, it's a subcategory within the gaming space, not terribly exciting. So I think it's useful for them to do that, but we'll have to see, I think, a lot more for Microsoft to say, we're going the way of blockchain integration on every game we release.
Yeah, for sure. William, it's always fun talking to you because I always get great insights, and you've got, first of all, a great amount of experience in the space that we cover pretty heavily. So it's always a great, engaging conversation. Thank you so much for stopping in today. We appreciate it.
Great. Thank you, Paul.
You bet. All right, so you guys are maybe tuned in on the audio side of this. Make sure, and of course, join us over here on YouTube. It's very simple. Search Paul Barron Network. You will find us, and we have a ton of videos on Web3, gaming, of course, the primary assets in blockchain. Maybe you're just looking at getting into blockchain and crypto for the very first time. All you have to do is jump over to YouTube. Get in on our Diamond Circle too. It's our one place where we do a lot more content that we don't sometimes put here on YouTube. All you have to do is visit our Substack. That's one of the best places to go. Very easy, just pbn3.substack.com. And of course, if you guys want to catch me, it's out there on X, @Paul Barron. We'll catch you next time right here on TechPath.